what it says. It says that we're using the work of the others. There are three different components are there. One is with respect to the experts. Okay, one is with respect to the experts, and one is with respect to the experts, one is with respect to the internal audit, one is with respect to service organization. Service organizations, now you have lot of service organization. Here we are talking about the internal audit is there, payroll is there. Now people are talking in terms of taxation also. Okay, taxation is there. And the people are talking about the accounting also. Okay, if we take into consideration most of the concept that has been explored over a period of time, is that when you are doing using the work of the auditors, experts is little bit more specific. Okay, with respect to IES is there with respect to 620 and with respect to 500. ISA 500 is the audit evidence. Okay, it is the audit evidence. It is the audit evidence, and the ISA 630 is the 620 is the work done by the experts. Okay, this is with respect to audit evidence, and this is with respect to Now, as simple as that. There's nothing new is there. The extension of what we have done, valuers, lawyers, and actuaries. Okay, in terms of non-current assets is in terms of any legal disputes and in terms of any valuation with respect to internal audit, relying already work done by the internal auditors. Okay, using internal audit to provide direct assistance to the external auditor. The external auditor work is depend on the effectiveness of the internal audit, that we know it. Okay, service organization. There are two types of experts. Okay, one is going to be the management experts that has been appointed by the client. Okay, by the someone engaged by the client who has expertise that is used to assist the preparation. The second one is auditor's expert, an employee of the audit firm or someone engaged in the audit to provide sufficient. Means we have to think in terms of one is the management expert, one is your auditor's expert. What the ISA 500 says, there we have provides guidance what the auditor should consider before relying on the work of the management expert. See, audit evidence very specifically provides guidance on what the auditor should consider before relying on the work by the management. When we are talking about ISA 500, it is the client who has appointed the management. Okay, the work of the management. This guidance is very similar given for relying work of an audit expert. The auditor must evaluate the competency, capabilities, and objective of the expert, obtain an understanding of the work means the expert should be qualified, as simple as that, in all aspects, experience, qualification, and professionalism. It is the appropriateness of the expert work as audit evidence for the relevant assets. Evaluate the appropriateness. The rest of the session focus on audit experts. Okay, this much is only with respect to management expert. Management expert role is very limited. Okay, very limited. Whereas auditors expert 160. Okay, using the work of the auditor provide the guidance to auditor. If the auditor lacks, means if he is as simple as that, he can appoint an expert to form an opinion. Okay, based on that he can see, even he is appointing the expert, the responsibility is with respect to auditors only. Okay, the responsibility is it will be on the auditors only. Example circumstances include any complex financial statements. Okay, here we are talking about theory. Subsequently, we are doing up the applications. Okay, land and buildings, jewelry, actuarial calculations with respect to insurance contracts or employee benefit plans. Okay, insurance contracts we have not done insurance contracts. It is right. If we have not done, it is not there in the syllabus. But if you take IFRS 17, okay, if you cover across IFRS 17, IFRS 17 is related to insurance contracts. We have not done this. Okay, maybe if there is a reference, we should not get panic that we have not covered it. Okay, you have this is IFRS. Employee benefits are which one? It is IFRS 2 or IAS 19? IFRS 2 or IAS 19? Any idea?
IS 19.
IAS 19, okay. IAS 19. IFRS 2 is what?
Share-based payments.
Share-based payments. Okay. The estimation of natural resources, such as in these cases, definitely, is it? In these cases, we have to. In these cases, we have to take the assistance of the experts, laws and regulations, and unusual tax compliance issues. The auditor must determine if the auditor must determine if the expert work is adequate. Is it? This is what we are working out. Is it right? To fulfill this responsibility, the auditor must evaluate the work of the expert with respect to competence, capability, and objectivity. These are the things, okay? Even if I am skipping, you can, there's nothing new, okay? We are talking about the experience of working, of the personal experience of working with the expert, discussion with other auditors, expert qualification, membership, is it? Return file. These are all they will not ask, okay? We are not concerned about this also, okay? They are not asked about this. They are very, very focused, okay? Only thing is the expert should be qualified, competent, and have the professional acumen. That's how professional is it? But it has to be objectivity. The objectivity is particularly difficult, is it? As they may not bond to similar code of ethics as the auditor, unaware of the ethical requirements and threats to which auditors are. Definitely, you cannot judge on the same platform with respect to the auditors. So you have to make inquiries, discuss applicable safeguards, okay, with the expert, discuss financial or business or personal interest in the clients, any familiarity, self-interest is there, and you have to obtain this is only the most important thing. Obtain written representation from the expert. Agreeing, we have to, once the auditor considered the above matter, then you have to get a written experiment from there. The nature, the role and responsibility, the communication between the two parties, and the expert to observe confidentiality. Okay, these things I'm little bit speeding it up. Okay, I'm telling you in advance. Okay, once the expert work is complete, the auditor must scrutinize. It is a responsibility of the auditor to evaluate the appropriateness of the audit purpose. In particular, the auditor should consider what is the reasonableness of findings, consistency with evidence, any relevance and reasonableness of the significant, what are the assumptions he has made, and what is the relevance with the completeness and accuracy of the source data. Is it? Now, this is another important thing. Auditors cannot devolve responsibility to forming an audit opinion. The auditor has to use the professional judgment where the evidence produced by the expert is sufficient. The expert is not going to be part of the entire process on paper. Okay, on paper he is not a part of entire process. The use of auditor expert is not mentioned in the audit report unless required by law and regulation. Reference to the work of the expert may be included in the report containing any modified OE if it is relevant to the any outstanding understanding of modified. Means one thing what this also it is not covered. I am telling you this. These are all it is only for our understanding. That's all. How we are going to frame. It helps us in framing the sentences. That's all. It helps us in our response. In our response, okay? Relying on the internal audit 610. Is that 620 is the expert's advice, okay? 620 is the six. Only the most important thing is these standards are very, very specific. That using the work of internal auditor. 620 is using the work of the experts appointed by the auditors. Okay, appointed by the auditors. Fine, that's as simple as that. If the internal audit is effective, okay, the internal audit forms the part of client systems of internal control. If this is an effective element of control system, it reduces the control risk. If internal controls are effective, control risk will be less, and therefore it reduces the need of auditor to perform detailed substance procedures, testings. Okay, internal. That is the reason we'll focus on test of controls, effectiveness of the controls. Okay, effectiveness of the internal audit. Auditors may be able to cooperate with client internal staff in department and place reliance on the procedures. Before relying on the work of the internal auditor, the external auditor must assess the effectiveness of internal audit function. Okay, you have to assess how actually if you take into consideration every month, okay, practically is that the role of the internal auditor is that every month they will have an internal audit report. Is it how serious they will take the internal audit report? That matters. The moment the external auditor goes to the client place, what the external auditor will do? External auditor will review all the internal auditors report monthly basis. What are the recommendations the internal auditor has done at the end of each month, and what are the changes or what are the improvements, and how those recommendations has been implemented. Is it? These are the things the external auditor will evaluate. Is it? These are the things the external auditor will. Then on that basis only we can make a judgment that internal auditor is effective or not, and internal controls are effective or not. Evaluating the internal audit, the extent to which internal audit functions, organizational status, relevant policies, procedures, suppose the objectivity of what is the purpose, okay? The competence of the internal audit function, whether the internal audit function applies systematic and disciplined approach. Is it? Including quality control. How we don't have that much. We are only having a specific, very targeted focus on internal audit only at this stage. Okay, how the internal audit functions reports to the charge with governance, or they have the direct. See, as a matter of fact, if you take into consideration the hierarchy, okay, you have the board of directors, okay. You have the chairman, and after board of directors, you will have the CEO. Okay, after CEO, okay, you have the management. Okay, of the man. Now, what happens? You will have some way. You will have an audit committee here, and somewhere here only you will have an internal auditor for internal audit. Means internal auditor will even supersedes the CEO. They are accountable to the board of directors, those charged with the governance. Is that those charged with the governance? They will report to these people rather than means even the even the activities of the CEO till the CEO, it is monitored by the internal audit. That is why those charged with governance. When the internal audit function is free from operational whether is free from operational responsibility. That they are not in any way involved with the financial statement. Whether those charged with governance responsible for employment decision such as remuneration with respect to internal auditor, okay? Whether those charged with governance are responsible for employment decision, whether any constraints are placed on internal function by management, any constraints are there, any controls on the internal audit, whether the internal auditors are members of the nowadays most of the head of the internal auditors is that they are also qualified as affiliates, okay? They are we are working with the competence that whether the functions are appropriate and adequate for the size of the organization. Now, if in most of the countries, they have made it compulsory, okay? They have made it compulsory that every listed company should have an internal auditor. It makes mandatory for them, okay? It makes mandatory for them. And most of the non-listed companies which are having a good turnover, okay, most of the non-listed companies, LLCs also, regarding to the size of the LLCs, they will also have the internal auditor. They will also have the internal audit. Whether the established procedures of hiring, training, assigning of internal auditors to internal audit engagement means what is the framework, okay? Actually, what we are doing, we are also having a close scrutiny, okay? Is it? We will also have this close scrutiny of framework of the internal audit, whether internal auditors have adequate technical training. In some cases, in some organizations, okay, it happens. In some organizations, is an internal auditor, okay, internal auditor, the staff of internal auditor. I will not say internal auditor, the staff. The team of the internal auditor may not be professional people, okay, certification people. They may be academic qualifications, okay, they may have accounting qualification, bachelor degrees, but they are not professionals. They can have, but they should have a related accounting and auditing qualifications to be part of this team as such. They should have what is the financial reporting and applicable financial reporting framework. Okay, they should be familiar with that. Okay, they should be familiar with the financial statement, financial reporting. Internal auditors are members of the professional body. Fine. Okay, evaluating the systematic. This is what they are talking about. Existence, adequacy, use of procedures. Is it right? Application of quality control policies. Okay, applications of. They are talking about now you are having a complete review of internal auditors. Again, we are not going to cover anywhere subsequently. Is that if the auditor is considered appropriate to use the work of internal, they have to determine the areas and extent to which the work of the internal auditor can be used. It can be used. Okay, evaluating internal auditor, the work was properly planned, fine. Okay, sufficient appropriate evidence has been obtained, conclusions has been reached, is it? And reports prepared are consistent with the performance. Just read this one. 1, 2, 3, 4.
Yes, sir.
Okay. See the thing. Can consider internal auditor. External auditor can consider whether the internal auditor can provide direct assistance with gathering audit evidence under supervision and review. The 610 provides guidance to aim to reduce the risk that external auditor overuses the internal auditor. See again, the ISA 610 provides guidance to aim to reduce the risk that the external auditor overuses the internal auditor. Direct assistance cannot be provided where laws and regulations provide such assistance. See the little bit we have to make a distinction between these two. Note that for UK syllabus, direct assistance by the is not allowed. Maybe for international syllabus, what is the requirement? We will make it a separate mark on that. They will ask the basic. Usually, if it is not there in our syllabus, they will not touch those points. So they are repeating the same thing, the competence and objectivity of the internal auditor. The external auditor must not assign work to the internal auditor which involves significant judgment and high risk of material statements. The planned work must be communicated with those charged with governance so that agreement can be made. The use of the internal auditor is not excessive. Means now what is the message you are getting? We can, to the limited extent, very specifically, to the limited extent only, we can use the work of internal auditors. We cannot say that internal auditor systems are effective. We can rely on that. Even we are taking the using the work of the internal auditors, we have to have a review of those work where it is agreed that internal auditor can provide direct assistance. What they say, if management must agree in writing that internal auditor can provide such assistance and they will not intervene in that work. The internal auditor must provide written confirmation that they will keep the external auditor information confidential. The external must provide direction, supervision and review. During the direction review, the external should remain alert to the risk that the internal auditor is not objective or competent. The auditor should document the evaluation of internal auditors, the basis for the decision regarding nature, technique and extent of the work performed by the internal auditor, the name, fine, okay. The written agreement of management mention about working papers produced by them. See the thing, what we have to do, we have to make ISA 500, it is the audit evidence, ISA 620, okay, and ISA, one other one is what? IS 600, is it right? Which are three? ISA 500 is the audit evidence, ISA 620 is what? 610. Okay, ISA 610. ISA 610 is the internal auditor. Is it right? ISA 610 is the internal auditor. ISA 620 is the audit or the expert appointed by the auditor. Okay. In the same way, see the thing. Now you have Now, if you take the market condition, there are so many agencies which are talking about the receivables. Okay, people will work as a receive collections. That's all. Their entire entities they will they will have a responsibility of collecting the receivables. Service organizations. Okay, service organization. Payroll is there, receivables is there, pension management is there, tax management is there, so many and so forth. If the company uses service organization, what is the responsibility? How the external auditor can rely on the work of the service organizations? Okay, audit evidence will need to be obtained from service instead or in addition to the client. Audit evidence will need to be obtained from the service organization instead of or in addition to the client. Okay, that means we have to either directly or through the client. Okay, in addition to the client. Okay, in addition to this needs to be considered when planning the audit. Audit consideration relating to entity using a service organization provide the guidance to the auditor. Again, we have to make sure that how the service organizations have been structured. Is it? We have to obtain the understanding of the service organizations sufficient to identify any risk of material misstatement. Design and perform audit procedures responsibly. Means you have to design the audit procedures, the work done by the service organizations. This requires the auditor to obtain in the similar way, the auditor how they are obtaining the understanding of the client organization, they also have to have an understanding of the service organization. Nature and services and their internal controls, nature and materiality of the transactions into the entity, level of interaction with service organization and the entity, the level of communication, the level of interaction, and in nature and relationship between service organizations and the entity. Is that now you have three things. Is that we are talking about the experts, external experts, we are talking about the internal audit, and we are talking about the service organization. Okay, the auditor should determine the use of the service organization, reputation, extent of external supervision, existence of external supervision, extent of controls operated by service provider, any error, experience of errors and omissions, and degree of monitoring the use. Is that they will ask one question, is it that some way regarding the experts, how we are going to rely on the work done by any of these three. Yeah, this we are doing first time, okay? Little bit more cautious on this one, okay? Because the moment you will come across this, we should not feel that we have ISAE 3 for assurance reports on controls at the service organization. We have not done before, okay? We have not done before. Obtaining a type 1 or type 2 report. Is it from the service organizations or from the service organization? These reports are paid in terms of ISAE. Is it? ISA, International Standards for Assurance Engagement. Okay. Insurance standards for international standards. Okay, international standards on assurance engagement. We have not done before. Little bit we have to be very careful. Is it what it says, the service organization description of the system fairly represents the system as designed and implemented. The service organization description of a system fairly presents the system as designed, and means how the service organization is working and how the service organization is presentation. The controls are suitably designed. The controls operate effectively throughout the period. They report to the on the above matters. Okay, to report on the above matters means we have to make sure that we should know how the service organization is effectively working. What is the type 1 and type 2 reports? Provides a description of the design of the controls at the service organization prepared by the management of a service organization. It includes report by the service auditor providing an opinion on the description of the system and suitability of the controls. Once it is done, I will ask you to read again, okay? Report is a report on the description, design and operating effectiveness of the controls. See, this talks about the design of the controls at service organization. This talks about the design and operating effectiveness of the controls at service organization. Type 1 talks about the design of the controls, okay, prepared by the management. Type 2 is design and operating effectiveness of the control. Type 2, it contains a report prepared the management of the service. It includes what contains, 1 second. It contains a report prepared by management of the service organ. It includes a report by the service auditor providing an opinion on the description of the system, the suitability of the control, effectiveness of the controls, and description of the test of controls. The suitability of the controls, the effectiveness of the controls, and the description of the test of controls. Here we are talking about the things. Just have it, okay? Here it includes a report, okay? It includes a report by the service auditor providing an opinion on the description of the system and the suitability of the controls. The second one is it includes a report by the service auditor providing the opinion on the description of the system, providing opinion on the description of the system, the suitability of the controls, the effectiveness of the controls, and the description of test of controls. Is it right? The auditor, if the auditor intends to use the report formed by the service auditor, the competence and independence of the service auditor, the stand. Fine. The similar way how we are talking about the internal auditor, is it right? But we have to be more cautious. Contracting the service organization to the client, visiting the service organization and performing the procedure, using another auditor to perform procedures that will provide information and controls of the service. Using another auditor to perform procedures that will provide necessary information means a independent auditor. Using another auditor is, you put it in a very simple words, an independent, okay, independent auditor to perform procedure that will provide necessary information about the controls. Obtain a type 2 report. Effectiveness of the controls, okay, effectiveness of the controls. Whether the date covered the report is appropriate, whether the client has any complementary controls in place, the time elapsed since the test of controls were performed, whether the test of control performed by the auditor are relevant to the financial statement assertions. It means if the controls are expected to operate effectively, okay? Effectively means you have to, whether the date covered by the auditor is appropriate, controls are, any complementary controls are there, any time elapsed since the controls were performed, and whether test of controls performed by are relevant. Perform test of controls at service organization, use another auditor to perform test of controls. Read this one, okay? I'm just giving you read this one till the benefits, okay? Till the benefits.
Yes, sir.
What they are talking about, the disadvantages there. Naturally, if you are talking about the service organization, outsourced services, about the secrecy, the confidentiality, those things only they will mention, okay? The main disadvantages from the auditor's point of view is concerned access to records, and auditors generally have statutory right to access client records that they consider necessary. They don't have about to enable them to form their opinion. They do not have such rights over records held by the third party. Such as means auditors have a direct control over client records. Okay, auditor have a direct control because by nature, by law and regulation, statutory rights. Okay, they have the statutory rights to access, but they don't have a statutory right to access the information by a third party. They do not have such rights over records and information held by the third party. If the access to records and information denied by the service organization, then they can impose a limitation on the scope of audit. if sufficient appropriation is not. Is it? If there is, see, if there is, it will not happen. But they are saying it will, usually it will not happen. But if there is any restrictions has been imposed, then if sufficient appropriate evidence is not obtained, this will result in a modified audit opinion. Is it? Now we have to be very clear. Is it? It's very by experience we will get all these things. Okay, by experience we can make a judgment within no time. Okay, we can make a judgment within no time. Reporting of controls. Okay. Fine. Just have a reading on that. Okay. Is it okay?
Yes, sir.
That is with respect to what? With respect to the 1, 2, 3. Okay, with respect to the experts, internal audit, and service organizations. Okay. The next one, the last one, is it right? Last one, little bit more. It goes more in depth. That's the most important. We have not covered this previously. It is not there. IS 550 related parties. Okay, related parties. They're little bit slow. First time we are doing this. Okay, first time. Owners, etc., and those related to them. It's a joint control, direct or indirect control, significant influence. Okay, significant owners, etc., and those related to them. The entity, key management, and those related to them. Okay, control or influence, subsidiary, associates, joint ventures, and pension schemes. Okay. Significant influence, just recap the concepts of SBR in this segment. Okay, very important. Recap the, if it is if it's not there, if it is not coming back by doing the things by going through the things, automatically it will get back. There is nothing wrong with an entity dealing with a related party. That's good. May increase the potential of the financial results. See, related party transactions may increase the potential financial results to be manipulated as transaction carried on the basis other than arm's length transaction. Arm's length transaction we have covered. Neither it should be overstated nor it should be understated. In these circumstances, it is appropriate for such transaction to be brought to the attention of shareholder. The auditor should obtain evidence from that the financial statement achieve fair presentation of related party and the transactions accounted in accordance to financial reporting framework. Means what they are saying, there is nothing wrong with related parties, first thing. But related party transactions will be, the risk will be more. There is a possibility of manipulation of transactions because of the arm's length transactions. Okay, and these transactions should, if any inconsistencies is there, it has to be brought to the attention of the shareholders. Okay, now what do the as an auditor? The auditor should obtain the transaction, obtain the evidence with respect to the related party relationships. Okay, and they have to say that this is the concept from the business point of view. Okay, this is the concept from the financial accounting. This is the concept with respect to the auditor's perspective. This is with respect to client's perspective. Once we have reading it, once we are going through it, automatically we know nothing is, we are going to have anything new, exceptionally new items will not be there. What are the disclosures we have to do? What is the nature of related relation, terms of relationship? Information of the transactions, including amount and any balances at the year end, any allowances, doubtful receivables or expenses recognized. Yeah, with respect to related party transaction, we have to be little bit more careful. Okay, no more careful. Okay, as an auditor, we have to have a close scrutiny. That's how I can say that much. Okay, we should have a close. If the transaction has not been disclosed, a potential significant deficiency in the internal control system should be reported. If the transactions have not been disclosed in according to those requirements, even where related parties has been identified, it can be difficult to spot transaction with them. Is that this is one critical area? Okay, even it has been identified. Okay, it is very difficult. Okay, very transfer pricing is there. If you have remembered transfer pricing, what you have done in performance management, is that we'll do the best of its ability, but there is always a scope. Okay. Directors may be reluctant to disclose transaction, particularly in case of family members. Transaction may not be easy to identify from the accounting system because they are not separately identified as a nominee. It is a part of the transactions. Okay, transactions may be concealed in whole or part from auditor fraudulent purposes. Why they say it is a related parties? Okay, when you are talking in terms of a group accounts, okay, when you are talking about a group entity, okay, in group entity, most of the companies which has been part of the group, whether it is a subsidiary, either it is going to be a subsidiary or it is going to be an associate. Okay, it is going to be an associate or it is going to be an investment. Is it? All these are being run by within the family. Okay, within the family, within the known people. That is the reason the risk at this stage is very, very high. That is, the transaction may be concealed in whole. We cannot trace it out. As a result of the risk above risk, related party transactions are generally deemed material by nature. Is it material by nature? Make it a point. It is IS 24 and ISA 550. Okay, ISA 550. Okay, there are two things, IAS 28 and IAS 550. See, that's a related parties are difficult to identify, okay, in practice. It is hard to establish exactly who and what related parties. Indicators of related party transaction include transactions which are very complex, transaction with abnormal trade terms, okay, trade credit days, number of days, credit limit, okay. We can get the triggers, okay. Transactions that appear do not have a logical business reason, transfer of money, okay, transfer of money to other people, okay, purchasing without invoices, okay. There are so many things, multiple things, no limit. Transactions that are not processed in a usual way. Is it right? Somewhere, yes, yeah, last week, okay, last week, if you have come across, okay, if you have come across